Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo Modiba. Thanks for joining me. Tonight, I'm joined by Maurice Madiba, founding director at Cloud Atlas Investing, to share some good news of the launch of the Cloud Atlas AMI Big 50 ex-South Africa ETF listing on the JSE Main Board. Maurice, thank you for joining us.
Thanks for having me, Tshepo.
Okay, let's talk about the good news. ETF covering 50 of the largest companies outside of South Africa. That's around, right? You guys are second on board, no?
Yeah.
First to launch a product like this. That's impressive. Can you share with us a little bit about the content of the product?
Yeah, so this is essentially Pan-Africa XSA ETF that's coming to market, and it looks at 15 different African markets all wrapped up into one. So this particular one that we're launching is called the Big 50, which has your 50 most representative stocks across the continent. So you've got exposure to markets that you've never had exposure to before as a local investor. Like Kenya, like Uganda, like Ivory Coast, Ghana, Tunisia, Morocco, etc. And then there's also in Southern Africa, Botswana, Zambia, Zimbabwe, and Uganda.
So in essence, this is almost a single entry. You can go in the JSE, buy a couple shares in this, and immediately you have access to these different countries.
Yeah. So all of them wrapped up at one single price point, fairly low fees. And then, you know, it's really targeted at investors that do want to trade, that do want exposure to Africa, that do want to buy Africa,
right?
And really get that exposure in a regulated market where they understand the counterparties, they understand the flow of shares, etc. And so it's giving them that exposure. So we've wrapped up Africa into what you can call a single security.
And how do you make decisions as to which companies qualify for the ETF?
So the ETF tracks an index called the AMI Big 50, and it rebalances on a quarterly basis. So what we do is we look at the markets based on how long they've been around, how many stocks they have, and then we start to qualify companies on their liquidity. Because in Africa, liquidity is being quite a big issue.
Right.
So we look at the liquidity of the stocks, free float, market cap, how much it turns over on a monthly basis and annual basis. And then we've also got another layer which then sort of moves the index from a simple market cap weighted index into a more enhanced index. Where we select the Big 50, we look at representation by sector and by country. So if we select one bank, say in Nigeria, the Guarantee Trust Bank, we're going to look at banks across the continent before we select another bank from Nigeria.
Right.
So you'll find that in the Big 50, there's only one bank from Nigeria, one bank from Botswana, one bank from Kenya, etc.
And how do you make the decision, I guess, between sectors? Is that really a function of how well capitalized the sectors are throughout the continent?
Yeah, so it looks at the listed sectors. You know, African markets are still very much in early development. From a listings point of view, we don't have that many sectors that are listed, and then also from a liquidity point of view. So what we look at is we look at the market cap of companies. So you would find every single African country has a listed bank, as an example. Right. But not every single African country has a listed healthcare company or a listed retailer. So we then scan the entire continent and say, if we're going to look at the sectors, let's look at the ones that are available. So there's about 11 sectors that we look at, spanning from banks to healthcare to insurance, all the way to utilities. So that's sort of the mix that you have in there.
So what sort of, I guess, immediate investment constraints does an ETF of this nature address? I'm assuming liquidity is one of those, because you guys provide that for investors.
Yeah. So liquidity, low cost. So the ETF is very much a low cost structured product. And you know, if you compare it to some of the other ETFs should give you good performance and not have that performance eaten into by high fees. But what you find with us is we've got a higher performance because of the markets that we look at and the nature of the growth that's still in these markets. And we're giving that to the market at low fees. So you're not only accessing markets you haven't had exposure to before, you're also not being charged an arm, a leg, and a leg to do so.
So if I'm sitting at home watching the show, and this sounds interesting, what type of investor are you looking to attract? What type of investor should be looking at this and saying, actually, that makes sense for my portfolio?
Yeah. So it's really our business structure and our offering to the market is to allow Africans to participate in Africa's growth.
All right.
So if you're an investor, this is something you should have in your portfolio. Especially if also you're constructing a global portfolio, you have a global play. For us also to gain scale, to keep the lights on, etc., it's really something targeted at institutions because they have a long-term view. So when they go into a market, they don't say, I want to get in and get out. They more look at the developmental aspect and the growth and the mandates that they have set out. So we would say this would slot into Africa allocation fairly well. You know exactly what you're getting, you know where the ETF would be clearing, and it's in a safe, regulated environment. Now, for a person on the street, they would be saying, a man on the street like you and I would say, look, I want some exposure to Africa. I already have a few ETFs. I can add this to my portfolio and see what the returns are like. And then for somebody who's never traded before, ETFs is the best way to start trading in the stock markets. It's not only our ETF, but also ETF issued by other service providers. You would say, I get broad exposure. So in this one, I get 50 different stocks. If I buy another one like a top 40, etc., I get 40 stocks at once. So I don't have the headache of having to pick different shares here and there. I just know I'm getting them all in one product.
Okay. As you know, on the show, we are big Africa bulls. Yeah. The show's name might give that away. What are the underlying themes that are going to determine whether somebody who's put money in now, in 10 years' time, has been successful or not successful? What are the underlying themes and risks that investors are going to be exposed to by investing in a product like this?
Yeah. So I'll start with the more obvious one, which is the rand hedge nature. So having any sort of foreign exposure in your investment portfolio does help when the rand does weaken. And the unfortunate thing about our currency is it always weakens by a larger margin than it ever strengthens. So having something like that is good. Then you look at the general African...
before you can, but on the flip side, if the rand strengthens, your performance will be impacted.
Yeah, somewhat.
Okay.
Although the rate of strength of the rand is never as rapid as the rate of depreciation.
Okay.
So you've got that, and then the other thing is actual growth that's remaining in the African market. If you take a look at some of the PEs of the companies within the Big 50, you're sitting at around 8 to 12 in that range of 8 to 12 times PE.
All right.
Which is fairly low considering global averages being a little bit higher than that. So you then look at the developing demographics on the continent and what that would contribute to listed companies, particularly food and beverage. And then you look at your real estate, the real estate development that's happening. As you just drive into Sandton City, there's a whole lot of new buildings that are going up. The same thing is also happening in some other African markets where there's new buildings, revamp of buildings, etc. So listed companies playing within that space are projected then to do exceptionally well. Your new malls that are opening up, improving people's capacity to buy goods and access to goods. And then you then have consumer-related stocks looking to do well, which is food and beverage, also your retail. And then banks, as I mentioned, banks are everywhere across the continent. So as the population becomes more banked and the number of people that don't have bank accounts reduces, those sectors would then naturally do well. So we're looking at an environment where there's budding demographics, very much contributing towards a strong growth story. And then there's also now the one risk is the soft sort of infrastructure, policies, etc., and the hard infrastructure, roads, housing, going to support that budding demographic? Because if it does, then this is definitely the place to be for years to come.
Can I put my devil's advocate hat on? Some may argue that given where the continent is currently, that to benefit from an investment perspective, you probably have to go the private equity route, where most of the value that's going to be created, given that our markets aren't quite sophisticated enough yet, is by buying into unlisted businesses as opposed to listed businesses. Would you say that's the right attitude? And I guess if it is, then it puts question marks around the product itself.
So what I would do is you always need a bit of both. So private equity is not accessible to the man on the street.
Right.
So that's one of the biggest things that makes the product a slight differentiator or differentiated. And then also when you look at private equity projects, if I just look at our business as an example, we were in the pipeline before we had a private equity investor for about a year and a half. So if I take that and extrapolate that onto the continent, when you invest in private equity, you don't always have projects that are waiting to, or businesses that are waiting to be invested in. So you might find that you could commit capital to the continent, but that deployment of that capital is not as effective or as quick as you would want. Whereas in the listed equity space, you say, I want Africa now, you get Africa now. So that's one of the things that makes private equity slightly different. And the two work hand in hand, or they should be. They haven't been though for the past couple of years. But typically, but a good example of a company is Umeme. So there was a big South African private equity firm that went into Umeme, which is the like of a Eskom in Uganda. Set up the business and got it running, got it operational, funded it, and then their exit mechanism was through the stock market. So this product then picks up these private equity deals once people do exit from them in the particular stock markets that you find. There's been very low sort of conversion ratios in that regard, but I think that's something that's due to change as this product comes in to sort of serve that value chain. To say, look, if we can provide the stock markets with liquidity, then we provide an incentive for private equity to exit into the listed equity space.
Okay, you've sort of sold me on that. I like that answer. I guess now the next question is, let's talk some cool stuff. Any cool underlying companies of the 50 that are worthwhile talking about and mentioning?
Yeah, so there's quite a few. I think all 50 of them are cool. So it's really Africa's blue chips. The one I spoke about last time on the show was Nico's Diamond Insurance in Zimbabwe, which offers short-term insurance. One of the first listings of its kind. Spoken about Kenol Kobel, which is a sort of downstream oil company in Kenya. And that's done very well. Then you've got your banks, your Guarantee Trust Bank, Ati Jariwafa Bank. I don't know if I've spoken about that before, but it's really an African bank that has both a local presence in Morocco, but also looks to service its expats that go to the likes of Canada, to the likes of Europe, and has branches. So any remittances that come from those expats, they sort of collect and they control that. Yeah.
Perfect. Let's leave it there.
Okay.
Thanks to my guest, Maurice Madiba, founding director at Cloud Atlas Investing. That's all from Buy Africa this week. Remember to follow me on Twitter. That's @Modiba_Tshepo. And send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team, goodbye.